So I got into the markets very early when I was 18 years of age as a broker. And just the flow of money fascinated me, and how it moved around the globe, basically. I loved what I did from an early age, and because of that, I worked really hard at it, and sort of went up through the ranks pretty quickly. And then later on, I decided that I'd prefer to be on the trading side than the broking side. And I started studying charts, left the markets or the institutional markets in 2002. And I've been trading my own money, educating ever since, basically. As I said, I was on the institutional side. So a lot of my pals were bank traders making megabucks, six-figure bonuses and stuff like that.
Yeah.
We did quite well, but we weren't in their league. We all wanted to be. And you couldn't do personal trading back then. You couldn't be a retail trader. IG Index, I believe, were the first platform that actually made spread betting possible in the UK. And then we had the launch of MT4, and that was white labeled across a lot of different platforms that made it readily available to individuals. It sounds ludicrous, but back in my day, there weren't really people weren't trading on computers.
Yeah.
We had a Reuters screen which gave us a spot rate, and we had to work things out by hand. So going back to those days, it was very much about a feel for the market, who you knew in the marketplace. People weren't looking at technical analysis. There weren't charts that you could read. It was far more about order flow. Like I said, it's always fascinated me. So I sort of started learning about technical analysis. I've got a pal who wrote a book about candlestick charts, Clive, a long time ago, and that was quite a new thing to futures traders, etc. And it just fascinated me. So I started studying technical analysis, and I sort of became a specialist in different fields. Years ago, Harriman House asked me to write a book on Ishimoku cloud trading.
Yes, yeah.
Because there wasn't anything out there, basically. So, like I said, I've just always been fascinated by it. I read loads and loads of books that people have written about technical analysis, the Wyckoff theory, smart money concepts. I use a form of SMC, smart money concept, and market profile. And I use them as an overlay on a chart to show me where the price is likely to go to grab the liquidity to then move in another direction. I actually use something called Cypher pattern analysis, which to a lot of people will sound like double Dutch, basically. It's a form of Elliott wave, but it's not. It's sort of fib levels, extension retracement levels.
Which are very, very strong.
Yeah, and if you can overlay that with points of control, which is basically where the liquidity is, and overlay a Gartley pattern that shows you, right, I'm hitting liquidity, I'm soaking up liquidity, I'm then getting out, I'm then getting back in, I'm then getting out. It's an overlay that gives you structure, basically. If I was to go back to the marketplace and start again, or what I try to teach novices at the start of their journey, is to get the basics. What is a candlestick? What does it tell me? What is an ending wedge pattern? What is a flag formation? Learn those basics, but then try and specialize in 3 different fields, and just use those 3 different fields as an overlay on your chart. So start with a naked chart. If you see wedges, write them on, draw them on. Use your measured move target. Know where your measured move target is. Know where your stop loss is going to be if you get a breakout, you're wrong. To go to the real basics, but then overlay 3 concepts on top of it. No more than 3 concepts. Otherwise, you can get what's known as analysis paralysis. So 20 indicators on a chart, one telling you to buy, one telling you to sell. Majority of the time, you're after the party. The boozer's gone, and most people are going out the door when you're turning up. What I'd have a tendency to do is to look at somebody maybe that's got a bit of longevity in the market, and has got a fixed approach. So something that's teachable. So this is how I approach the market. I do A, B, C, and D, and that results in me executing a trade. There's my entry, there's my stop loss, there's my target. I think a novice's biggest fault is to move stop losses. I think you have to just set your plan out and just run with your plan. If you keep moving stop losses, you're going to get your big drawdowns. You know, you're going to get stopped out. You know, if you're looking at a funded account, you know, you're going to blow it up. So just stick to your plan. Look for a guru that you want to follow, and try and work out how they do it, basically.